And so in this one, what I'm going to do is I want to cover something that I think is sort of oftentimes, in fact, most of the time, is kind of under the radar when you're shopping for a mortgage to buy a home. And in fact, even if you're shopping for a mortgage to refinance a home. So in fact, consider this. When you've shopped for a home, you have, well, here's the headline first. 20 is the new 30, the overlooked loan term that might be your best move. So with that, consider this. You're shopping for a mortgage to buy a home. Chances are you've probably been told about a 30-year loan or a 15-year loan. Those are usually the two options that most lenders are going to show you. But there's another option that most lenders don't even consider bringing up, or at least letting you know is available so you can make a more informed decision. And that is the 20-year mortgage. The 20-year mortgage can be a very good compromise, sort of the middle lane between these other two options, the 30-year and the 15-year, because it's going to give you faster equity buildup. You're going to incur less interest cost over the term of the loan, and the payments are still manageable. And that's important to know because, many times I've been asked, to provide some quotes on a mortgage to buy a home. And when I do that, usually we'll start with the 30-year. And a lot of times I'll have the prospective buyer say, well, you know what? I understand 15-year loans have a lower rate. Can I see that option? So I provide that. And I'll tell you what, 9 times out of 10, probably 9.5 times out of 10, once they see that higher payment on that 15-year loan, yeah, it's great. The rate's lower by usually quite a bit. There's a lot less interest paid over the term of the loan. But when they see that monthly payment, wow, it spooks them. And in almost every case, they say, well, duly noted, thank you for that. I'll stick with the 30-year. But that's why I believe the 20-year is sort of that hidden, almost secret option that certainly with me, I'm trying to tell people about more and more. So let me show you some numbers just to illustrate what I'm talking about. So what I did here is I'm providing you some numbers based on a $500,000 loan amount. Okay. And so the first thing I want to show you is the standard 30-year fix, right? Right now, of course, based on our rate grid you saw earlier, 30-year loan, no points, 5 7/8, $500,000 loan amount. What's your principal and interest payment going to be? $2,958. Now, over the life of the loan, the full 30 years, you would incur $565,000 just in interest cost. So, of course, the argument with a lot of folks will be, well, wait a minute, I'm borrowing $500,000. I've got to pay that back. And then I got to pay $565,000 of interest as well. I'm paying more than double my loan amount in interest. Oh my gosh, that's terrible. Well, that's true. But let me give you a little hint. I understand that analysis. Yeah, it's worth considering. Yeah, you should be aware of it. I will tell you that in a majority of cases, you'll never incur that $565,000 of interest. The reason? Because a majority of borrowers, when they get that $500,000 loan to purchase a home, particularly if it's their first home, the probabilities are you're never going to pay that 30-year loan to term. You are not going to make 360-month payments and still have that house 30 years later that is now free and clear. In a majority of cases, particularly in California, that is a rarity anymore. In fact, the average life of a mortgage, in terms of what in the industry technically is called prepayment speed, it's more like 7 to 10 years is the average length of a mortgage before it's paid off. And of course, it can be paid off because you're selling your home, because you refinance the loan, maybe a couple of times if rates keep dropping. There's a variety of reasons. You win the lotto and you just want to pay it off. There's a variety of reasons why in a majority of cases, when you get that 30-year mortgage, you're not going to pay the full 30-year term. That's very, very unlikely. So don't get too worked up about that $565,000 of interest that you're going to incur if you make all 360 payments. All right, so with that little tip, let's look at the 15-year loan. 15-year loan, yes, the rate's much better, 5.125. $3,987 a month principal and interest. That's $1,000 a month more. That's why, as I said earlier, virtually every case when I'm giving somebody quotes on a 30-year loan because they say that's what they want, but then they say, hey, wait a minute, I hear the rate's a lot better on a 15-year, and you can see that it is. And then when they see what the payment is, like, oh, never mind. I don't want to pay $1,000 a month more, even though, yes, I understand the benefit in terms of a lot less interest. And you can see it there, $218,000 of interest over the life of the loan. So that's why, at least initially, a 15-year loan seems like a great idea. A lot of folks have interest in that option, and in part because they look at the full 180 month term and they say, well, guess what? It's going to be less than half the interest as a 30-year loan, and I'm not paying more than double my loan amount in interest with that option. Sure, that's true. But the trade-off is, can you comfortably handle $1,000 a month more in your principal and interest payment? Even if you're able to qualify for that $1,000 a month more payment, which in many cases that borrower who's inquiring about a 15-year loan, and we find out, well, they can't really afford it based on debt ratio anyway. But even if they can, a lot of times they say, well, wait a minute, I don't want to pay that much more. And what that really means is they don't want to be locked into paying that much more month in and month out. So sometimes the reply is, well, I'll stick with the 30-year, but I'll pay some extra on my own in order to reduce the interest cost. And yeah, that is an option. Or the other thing that folks will look at doing is, well, I'll go with the 30-year loan and then set up a biweekly payment and be able to pay less interest that way, which is an option, but I don't think is the best option. And the reason I say that is because of, on the bottom here, the last one, 20-year loan. Now look at this. A 20-year loan gives you a substantial benefit in rate over a 30-year, just like the 15-year loan does. 5.25%, not quite as good as a 15-year, but really very, very, very close. 5.25%, 20-year fixed. Your monthly payment is going to be higher than the 30-year loan. Yes, $33.68. That's a lot more reasonable, a lot more manageable than that 15-year payment. And so when you consider that and the fact that, yes, you're going to pay a lot less interest over the 20-year term, $309,000, again, still a little bit more than half your loan amount, but certainly not double your loan amount, that becomes something that you go, wow, hadn't really thought of that. Hadn't really heard about that very much. Here you are, right here. You can see the 20-year loan, again, sort of that hidden option that a lot of us in the mortgage industry, I think, do a poor job of telling borrowers about. This can be a great, great middle lane, sort of middle of the road trade-off between you're trying to, keep your payments manageable. You'd like to pay less interest. And most importantly, you'd like to accelerate the rate of wealth creation, of increase in equity. And that's the important thing to note. A 20-year loan is going to give you less interest and manageable payments, and that equals faster wealth creation. It's a better strategy than a biweekly 30-year loan. In fact, just to remind everybody, how does a biweekly loan structure work? Why does that reduce your interest cost on a 30-year loan? Well, basically, when you're doing a biweekly payment schedule, what you're doing is you're taking half your monthly payment, dividing it by 2, and then paying that amount every 2 weeks. Well, that's 26 installments. Well, if you think about a monthly payment divided by 2, and you pay that 26 times, what that means is at the end of the year, you're paying 13 monthly payments. And yes, that does reduce your interest cost, but if you pay that out to term, it's not going to lower your interest cost down to the 20-year level. It's going to lower it, but you're still going to take about 23 to 24 years to pay off the loan. So that's why I don't think the biweekly payment option on the 30-year loan, the 30-year loan option or choice is as effective as just going with the 20-year. Now, yeah, over the term of the loan, you're going to pay about $2,000 a month more than a biweekly payment, but I think that's a pretty reasonable trade-off and save more interest and shorten the term even below that 23 to 24 down to 20. So with this information, what I would encourage you to do, if you have any interest in getting a mortgage right now, if you need to get a mortgage to purchase a home or even on a refi, if you want to see the numbers, how that plays out, reach out to us. I can, again, put together for you a worksheet to give you all the numbers and show you how the 20-year loan really could be the new 30. It's the overlooked loan term that might be your best move. Let me show you how, and I think you'll be very well pleased. And if you're able to qualify for that, I think it's a great option for you to get that, loan purchase, that home purchased, and be able to have the great combination of less interest costs, manageable payments, and greater, faster wealth creation. Okay, with that, I think we have concluded the program. I want to thank everyone for watching and listening to this week's Mortgage Minute. My name is Art Alvarez with MortgageWorks. You can see all my contact information on the screen. Feel free to check out our website. Look at those rates from time to time, day to day, week to week, just to keep track on what's going on. And again, if I can help you in any way, providing you some numbers for almost any scenario, please reach out to me. I'd be happy to have a discussion with you, get you those numbers, give you some guidance about what's the best option in terms of financing, and hopefully help you be successful in achieving home ownership and building your wealth. So with that, have a good weekend. Stay tuned. Look for that World Series starting tomorrow. Have a good weekend, and we'll see you next week on the next edition of the Mortgage Minute. Thank you.